Good morning, welcome to the currencytransfer.com daily market update for Friday the 26th of January. The headlines from yesterday, obviously the ECB met suggesting inflation may rise in the medium term. Trump spoke about a strong dollar, and sterling just trims back and comes back from the recent highs. The ECB meeting was clearly the most important thing going on yesterday. It could even be a watershed moment towards a much stronger euro. Draghi confirmed in his press conference that the growth across the eurozone is both strong, solid and broad, and that inflation would most likely start to rise in the medium term. As a result of this, there was actually no mention of any tapering to the asset purchase scheme. So normalisation of Eurozone monetary policy will come in future meetings, no doubt. He was challenged about the dollar policy, suggesting that if a weaker dollar did turn out to be, was confirmed as US policy, then strategy may have to be changed. But no doubt that's just politics whilst the dust settles around the recent comments. Relating to that, over in Davos, President Trump played politician. He told CNBC that the US does favour a strong dollar, ultimately, suggesting that the comments from Mnuchin may have been misconstrued. But again, we'll wait to see. He's on stage again later today, and I'm sure there'll be a lot more questioning around that, looking for clarity over what the US policy is. Treasury Secretary Mnuchin himself clarified that, and I quote, "This is not about protectionism, this is about free and fair reciprocal trade. Anyone who wants to trade with us on reciprocal terms is welcome to do so." So that's all sorted then, right? Who knows? I'm sure there'll be a lot more clarity coming out in the ensuing days. The dollar index dropped after to a new low after Draghi's press conference, and then actually recovered slightly during when President Trump was interviewed. The volatility that the dollar index is seeing right now, it just confirms that the market is still trying to work out exactly what US policy is going to be going forwards. We'll put the exact data around the dollar index in the comments below. Sterling was largely in reactive mode yesterday. The wider market was continuing to sell off the dollars, and that helped drive cable to fresh post-referendum highs. Against the euro, it didn't perform quite so well. Sterling slipped back on Draghi's comments, and this is despite both Germany and Ireland both talking up close relationships with the UK after Brexit. Regarding Brexit rumours, there's suggestion that the UK may adopt a Norway-style agreement during the transitionary period of 2 years. This will mean that EU laws will still apply to the UK, but that the UK will have no power to influence or affect them over on the continent. Importantly, that means that free movement of labour and the jurisdiction of the European Court of Human Rights will both still apply for at least 2 years. Looking ahead to today, fourth quarter GDP report was, that came out this morning, and that was better than expected. Came out 1.5% against a forecast 1.4. Little reaction against sterling as a result of that. And then Bank of England Governor Carney is scheduled to speak at 2 PM today. So we'll keep you posted if anything exciting or important develops in the meantime. But otherwise, I wish you a very happy Friday, and we'll catch up next week. All the best. Bye.